Good morning, everybody. Today is February 18th, Tuesday, 2020. And the latest news that I've seen before leaving the house was that the market was substantially down. It was between 250 and 300 points down, maybe more, but I cannot look because I'm driving a car, obviously, and it's not safe to look at the market, especially when it's declining, because you would be actually driven to buy something because it's cheap, it's on sale. And considering that the economy is actually in pretty good shape, the unemployment it is at a very low, a lot of jobs are being filled, and the people's expectations, business expectations, are pretty high, or what they call confidence levels, because people kind of know that they're sure about the next day, what's going to happen to them, and with their jobs and with their salaries and earnings. So however, because we have a health scare, or because of the coronavirus, then obviously we do have this is actually our third day in a row, third or fourth day in a row when the market is declining. And if you study some statistics, that like I do, you will notice that such losing strikes on the stock market do not last beyond 3 or 4 days. So the probability that the stock market will bounce back and go start growing again are very high at this point, because people, the market is being driven by two things, and it's called fear and greed. So obviously the market right now is in fear, and people are scared, and they are dumping their stocks, which actually accelerates the greed feeling, because people look at the current valuations and they realize that stocks are cheap and that maybe it's time to jump in. So, but when we have such a kind of like major sell-off across all sectors of the market, what happens is that it's hard to pick individual stocks and say, oh yeah, this is going to be the winner when the stock market bounces back. So I would say much better alternative is to invest into ETFs, because ETFs are invested in several stocks at the same time. So with one purchase of, let's say, $100 or $1,000, you would be actually invested in all these stocks concurrently. And if the general mood on the market goes back to positive, obviously those stocks, or the majority of those stocks, will bounce back and take you up in terms of the price of the ETF. So a good case in point is DIA, David Iron Apple. This is the ETF that closely matches the Dow Jones Industrial Average Index, and it invests itself into 30 companies, 30 blue chip companies such as Microsoft, Intel, Merck, Home Depot. And these companies are very sound, very substantial players on the stock market, so with very serious business and valuations and market capitalizations that go to up to more than $1 trillion, for example, like Microsoft. So I would say that right now it's a great time to start considering, or maybe actually buying such ETFs that invest in major market players, some major blue chip companies. So, but to find these ETFs, to find the best ones, it could be quite a tedious work. So especially if you consider that there's over 2,200 ETFs being traded on the stock market, and constantly, not constantly, but pretty much like every month they introduce a handful of new ETFs that use some proprietary formulas to invest into the market. So to help you find the best ETFs to invest in, especially right now when the market is in a sell-off, I recommend you to go to this website called 4etf.com, and this website will actually take you to the Apple App Store, where you could download, install, and run an app that on your iPhone, iPad, and Apple TV. And this app actually covers all actively traded ETFs on the stock market, and it covers over 2,200 ETFs being traded. So what it does, it evaluates all those ETFs based on technical analysis. It looks at RSIs, it looks at Bollinger Bands, it looks at moving averages, and basically it assigns a score of probability, basically, that says, okay, there's a very high probability this ETF is going to go up in price, or this ETF on the contrary will decline. So and since we on the market you could actually buy options on ETFs, then it becomes even more attractive, because with very little money you could actually lock in a specific price for the ETF and basically wait for this ETF to bounce back and actually earn quite a bit of money. Like case in point, the ETF that I just mentioned in the beginning, DIA, right? It opened at $293 a share. When I was leaving the house, it was trading at $291 a share. So it was a 1% decline of $2. So if you, what I was doing, I was actually buying some calls on this ETF, some like $293, $294 calls. These are the strike prices for this Friday, because first of all, it already declined in the last 3 or 4 days, and my systems and the probability metrics that is applied to DIA basically says chances that this ETF and the market in general will continue this losing strike are slim to none, which makes it logical to buy this ETF. So get this app. Thank you for your time, and good luck trading.